走进纽交所，直击华尔街。本周银行板块危机愈演愈烈。周一，摩根大通同意106亿美元的价格收购第一共和银行的大部分资产。周二，纽约证券交易所表示将启动第一共和银行股票的退市程序。银行板块的恐慌情绪在市场上蔓延，这带动了美国几家地区性银行的股票大幅度下跌。周三，美联储宣布加息25个基点，将联邦基金利率调整到5%到5.25%的新目标区间，这是自2022年3月以来的第10次连续加息，而三大主要股指再度悉数收跌。周四，地区性银行股遭到了严重的抛售，总部位于加利福尼亚州的西太平洋合众银行，因为其持有大量未投保的存款，领跌了地区性银行股，市场信心遭到严重打击之时，周五，强劲的4月份非农就业数据提振了市场的情绪。另一方面，苹果公司于周四盘后公布了第二财季的财报，营收超出市场的预期，这也给市场注射了一剂强心剂。地区性银行板块也在周五大涨。银行板块的危机是否像美联储主席鲍威尔所说的一样，正在改善之中？本次加息是否是近期最后一次？本周我们邀请到了 Systematic Ventures 的首席执行官 Max Wolff 先生来一起解读市场的走势，以及接下来需要我们重点关注的问题。Hi Max, thank you so much for being here with us today.
Thank you. It's a pleasure to be here.
This Wednesday, the Federal Open Markets Committee raised the federal funds rate by 25 basis points, which is the highest level since 2007. Do you think it's the last interest rate hike in the near future?
So a lot of people had hoped it would be because it's clear that we haven't had as much success as some would have liked in reducing inflation, which remains somewhat elevated here. But it's also clear that parts of the economy are beginning to really drag to sort of go into at least a low growth mode, if not toward a recessionary mode. And so I think a lot of folks had hoped this would be the last one. But then on Friday, so just a few days after the Fed decision, we got an unusually strong jobs report of 260,000 plus new payrolls created. And that suggests that maybe it's not. The Fed has begun the process, Jerome Powell has begun the process of guiding the expectation toward one or no more, and probably almost certainly a pause. So we won't see any rate action change in the next meeting, and people will look very closely at the next meeting's statement to try to decode the likelihood of a future raise. But I do think it's one of the last. And I would just say one thing that doesn't always come up. It's, I think, a big story, which is 10 rate hikes in a year. The pace is very fast, and it was off a 20-year period of near zero interest rates. So we kept interest rates so low, so long, that a global economy developed on the expectations of those rates, and then we raised them very quickly. So they're not that high, but they were raised quickly off a low base. And I think we're going to have to figure out how much long-term impact that has.
You brought up the point that although the US labor market is still very strong, the economy is facing a high level of uncertainty due to high inflation. So what is your viewpoint? Do you think a recession is coming very soon?
Yeah, so great questions. I'll try to take them in order. I don't think we're in a recession now in the US, but I will say one thing, which again might be controversial, but I think in the US, there's the formal economy, as there are in most developed countries, right? But what has happened, which I don't know if the world fully appreciates in the United States, is we've got a very large informal economy of people who are not in the labor force. It's not illegal per se, but they don't work in the standard organized fashions that we're used to, right? So they work in the gig economy, doing things as an independent contractor. They trade goods with each other, barter, they do little favors for each other and don't report it to the tax authorities, and they use cash. I think that economy has gotten much bigger. And a lot of the more vulnerable people are in that economy. And so recession starts there, probably for them. And it doesn't show up in our numbers because they're not reporting the numbers that we economists use when we do the job market analysis or capacity utilization analysis. So my guess is parts of the economy, the lower parts, informal parts, may already be in a recession. But overall, the formal economy is not. So I do think we are probably going to have a recession, but I think it's probably a late 23, early 2024 story for us here in the US.
Over the last week, there has been a lot of turbulence in the banking sector, partially due to the failures of Silicon Valley Bank and First Republic Bank. This actually has led to an increase in depositors moving their funds into market mutual funds. So do you believe that this trend will pose a comparable level of risk to the money mutual funds?
It could. I think the risk might be different. So if I were identifying the risk, what a lot of people moving their money to the money funds don't seem to understand is that they're not always FDIC protected. So one of the things we've learned for all the depositors in Signature and Silicon Valley Bank and also First Republic, right? And we work pretty closely historically with folks at First Republic and Silicon Valley Bank. So we had a very upfront seat to what happened here. A lot of them are moving to money market mutual funds for safety, but they're actually leaving FDIC protection. So they're taking a lot more risk because the firms have the money market account. So the firms have FDIC protection, not each individual. So I think that's going to possibly be made clear to people. That might make them nervous on the one hand. On the other hand, I hope that the worst of the banking problem is over, but I'm not so sure because as the Federal Reserve continues to push rates up, the value of the treasuries that these banks hold goes down. And look, we saw runs on banks. Obviously, Silicon Valley Bank, a lot of money left very fast.
Right.
First Republic, a lot of money left very fast. That would be a challenge to any institution, no matter how well managed.
Let's move forward to the last question we have here. Looking ahead to the second half of this year, what major trends do you anticipate will shape the stock market?
So I think the second half of this year is going to see a couple of different trends. One, I think we're going to see a little bit of weakening of the earnings perspective from large companies, right? Which is, potentially going to be a shaping influence here. I think energy prices will come down a little bit as global expectations of growth get tempered a bit. And my sincere hope is that we see at least some path toward an end of the conflict between Ukraine and Russia, although I'm not optimistic. And I think if we can see that, if we can see some light at the end of that tunnel, it will be helpful. Otherwise, I think I see the US moving into a more recessionary pattern at the end of the second half of 23 and into 2024. Last thing I think maybe deserves more attention than it's getting is there's been a large government stimulus spend associated with COVID programs, and it's ending now in the US in mid-May, right? And so if it ends, then you're removing a support. Just one thing for people to keep in mind, a lot of US government economic growth performance in the last 6 months has come from federal, state, and local government spending. So I think we're going to see a little bit weakening there, and we're not going to see enough strengthening in the consumer or private sector. And then last piece there to watch really closely is US savings rates are not that high by international standards for sure, but they've come down. And normally when you see debts come up and saving rates come down, you're going to see a little bit of a weakening pattern from consumers because they can't spend out of their savings and the interest rates are going up, so the debt's more expensive. So I think we're going to see some support coming off from the government sector, some weakening in consumer, and we're not going to see the growth that you'd need from corporate to keep the economic growth projection all that strong for late 23, early 24.